What's up, YouTube? This is Laken Banks and welcome to my channel. So today I'm going to discuss how we invest during a recession. Now let me tell you something. Millionaires are made during a recession if you have the proper funds and if you are investing in the right things. Now I'm going to give you tips on how to invest in a recession to make your money double, more than that, in the years to come. Now let me tell you something. I'm not a financial advisor. You watch this at your own discretion. I'm just telling you what I do with my money, and I've invested thousands in the stock market. So this video is how to invest during a bear market. Now, what is a bear market? A bear market is basically when the stock market is doing bad. A bull market is when the stock market is doing good. You might have heard those terms, so at least you're a little bit more familiar with them. Okay, so before we decide to invest in the stock market, we first need to make sure we have 6 months to 1 year's worth of your monthly expenses saved. This is called your emergency fund. Oh, Laken Banks, I hate hearing about this emergency fund. Why is everyone always telling me about my emergency fund? I just want to make money now. Guys, an emergency fund is vital. It allows you to keep paying your bills if something bad happens, i.e. you lose your job, you're off on sick leave, or you can't work because of a pandemic. So how do we build an emergency fund? Let's say for 1 month, your monthly expenses are $2,000. $2,000 includes your rent, it includes your car payment, it includes your gas, it includes your food. It's your basic necessities. If everything was broken down to a skeleton, this is what you had to pay for. So $2,000 times 6 months is $12,000. For this example, you need to have a minimum of $12,000 saved before you start investing in the stock market. Okay, that is your cushion. This will help you if unforeseen circumstances arise. Okay. All right, moving on. Step number 1. So in this step, you have to have a maximum amount of money that you are willing to invest. In a bear market, everything is on sale. You can easily overextend yourself by trying to invest in every deal. So you need to have a plan about what you are going to invest in, but most importantly, how much you are willing to spend. You can easily overextend yourself and start pulling from your credit card, start pulling from your line of credit. Next thing you know, your car breaks down. Or God forbid, you have to help your parents out with rent. You're gonna end up taking that money back out of the stock market, and it's gonna be low because we're in the bear market. Okay, learn from my mistakes, because during this February-March 2020 market crash, I didn't have a plan of how much I wanted to spend. I had about $5,000 in my bank account, and I'm like, oh my gosh, Coke and Apple are on sale. Let me go invest. I start putting a couple thousand in this, a couple thousand in that. Next week, I see my favorite bank start to tank. And I'm like, oh my gosh, let me put some money in that. Then the next week it goes even lower. Let me put some more money in that. To the point where now I have major things to pay for and all of my money is in the stock market. This is a problem, okay? Because you're investing now for it to grow in a few years, and do not invest money you'll need within the year. Investing is for money you need 2, 3, 40 years from now. This is how millionaires are made, by compound interest. By investing in the stock market and the gains from the company compounding over years, 40 plus years. That is how you can build wealth. The same way the credit cards get you with compound interest with debt is the same way you can build wealth in the stock markets. All right, moving on. Step number 2. So the day the stock market crashes is not the day to invest. The day the stock market crashes is the day to find out why it has crashed, okay? The reason why you need to do this is to help educate yourself and do research so you know what's a good buy, what will rebound, and what will most likely stay low for years or even bankrupt. For example, during this pandemic, everyone is having to social distance and stay home and quarantine. So what stocks are going to be affected? Restaurants, restaurant brands, high-scale dining, shopping centers. People aren't going out. People aren't buying clothes. They're cooking at home. And some people are losing their jobs, so they don't have money to spend on those things. However, Walmart stocks and Amazon stocks are skyrocketing. You want to know why? Because Walmart's an essential service during this time. Everyone's going out and having the toilet paper pandemic. Don't get me started on that topic. And Amazon's going up because you can order stuff online and everything is about social distancing right now. That's why it's important to figure out why the stock market has crashed. Do your research. It's just Google. You hear it on the news, you get little whiffs of it. Oh, the stock market has crashed. You see that oil is down. Oil in Canada right now is at 70 cents a liter from like 120, 110. That's not a coincidence. That's not, oh, hey, I got so lucky. Something happened in the economy. Go do your research, figure it out. For this stock market crash, it was 2 reasons. It was the pandemic, which is causing us to social distance, and it is the oil crash. There was an oil war between Saudi Arabia and Russia, and it's flooding the market with oil so that everything's cheap. However, eventually, things will go back to normal. People need gas in their automobiles, right? People need gas on airplanes. So doing this education will help you decide what to invest in. Step number 3. Step 3 covers what you are going to buy. Now, I decide what I'm going to buy based on a multitude of factors. Does it pay a dividend? Is it a blue chip stock? What's its dividend payout ratio? What's its earnings per share? Has it ever missed a dividend payment? How long has this company been around? Etc., etc. Now, don't worry, Laken Banks will go over all of this terminology, but it takes a lot of research to decide what you are going to buy. And the best platform to do a lot of this research is on Yahoo Finance. So download Yahoo Finance and it'll tell you so much information on the stock that you're interested in. That's what I use. Now, let me tell you about blue chip stocks. Blue chip stocks are big, stable companies that have been around for years and years, maybe even 200 years, and aren't going anywhere. The government will likely bail them out, and they're so well established that they have thousands of jobs. They employ thousands of Canadians or Americans, and they are going to be around. They are going to withstand it. Hey, the company might have even been around since the Great Depression. These are the kind of companies you want to invest in. Like, I'm sorry, but I'm not going to tell you to invest in weed stocks and to invest in the new startups. They're too risky. You don't know what's going to happen. Yes, if you got lucky by chance, you might have invested in weed stock, it skyrocketed, and you made some money. But you want to have stable stocks that they might not skyrocket, but they're going to be around. You're not worried because you're putting your hard-earned money into the stock. Buying a stock is buying a share of a company. You want to make sure that company is going to be around. So that's why I invest in blue chip stocks. They're stable. Eventually they're going to go up. And a lot of them pay dividends. That's my second term to explain. Dividends are amazing. It's basically like a company paying you to invest with them. So you get paid a dividend for every share that you own. So let's say you put $1,000 into McDonald's. Because McDonald's is, let's say, $200 a share, that means you have 5 shares. The company will pay you a dividend for each of your shares. And that's just another way of making money besides the stock going up in value over time. Dividends gives you bang for your buck. Basically, it's paying you to play. It pays to play, ladies and gentlemen. It pays to play. Market investing is how to build wealth. You don't build wealth by putting your money in a savings account. It's not going to get you to $1 million in 40 years. Investing in the stock market and taking that risk, investing in companies that have fluctuating gains and losses, that is what makes you rich. Okay, now back to dividends. Dividends leads to payout ratio. Payout ratio is the percent of net income that a company pays you out in dividends. Now, a good company will pay you less than 50% out in dividends. So they can reinvest that money back into the company, build their business, open new locations, etc., etc. New tech startups or any kind of startup is not going to pay you dividends because they're putting all that money back into their company. Now that's another just big reason why I love me some blue chip stocks. They're established, they pay dividends, etc., etc. Okay, so you have your emergency fund, you have your stocks picked out, you've educated yourself, you have your brokerage, which is your stock trading platform. That's another thing. And you're finally ready to put your money in the stock market. Do not put all your eggs in one basket, meaning do not invest it all at one time. Invest it in increments. 500 at a time, 1,000, another 500. And I'm not talking about in a few days, it might be over a few weeks. You don't want to put that $5,000 in, and then the next day you've seen that it went even further. You're going to be kicking yourself, and you're going to be annoyed because you're like, oh, I should have waited. Okay. That's why you put in little increments at a time. Don't go too low, like $100 at a time, because you have to pay a fee every time you trade. For a general rule, you want to put it in on a basis of dollar cost averaging. Now that's putting a fixed amount of money in every single month, no matter what the stock market is doing. However, during a stock market crash, I personally put it in every week to hit the lows and the highs of its volatility, because you're getting everything on discount right now, okay? Now, once you put all your money into the stock market, let's say your cap was $5,000 and you spent it, in a month, let me just warn you, or even in a week, you might see all your stocks go down further. Do not panic, do not sell, okay? This is the mental game, a little bit of it, okay? During a stock market crash, this will happen. The only time your losses are actualized is when you sell. Do not sell it. That stock will eventually rebound if you've done your education, you invested in your nice blue chip stocks. This is where, what? Millionaires are made, okay? Leave your money in there, even if you see it all in the red. And because the more the market goes down, the more stocks you can buy. The more stocks are in your plan, when the market rebounds, you will be laughing all the way to the bank. Okay? That is my little crash course in investing. During the stock market crash, just a little bit of my own journey, I've invested like over $20,000 in the stock market. Don't ask me where I got that money from. Oh my goodness, I literally pulled from everything. If you're Canadian, I pulled from my RSPs, I pulled from my TFSA, and I just shoved it in there. I did research and bought amazing stocks, and I will share with you my favorite stocks and my top dividend stocks in my next video.